Hey, what's going on? It's Gary Wilson here, and in this video, I want to talk about my personal UK property investment criteria. So, for those of you who know me, I got my start in digital marketing. I've been doing that since I was at a very, very young age, and with all of that digital marketing money, I've became a property investor. My mum was actually retiring as a teacher a few years ago, and she was investing in properties for her retirement. And basically, from that, I started to invest in properties and work with her. And it was a great thing to do as a family, and it was also a great thing from an investment sense. And I've been in the game now for a few years, so I've learned a lot about the right types of properties to buy, the wrong types of properties to buy, and I'm actively investing myself. So I've got a lot of cash right now. I'm always looking for new deals to invest in. And it's one of the main reasons I actually own a sourcing company which sources property deals off market, because I want to get those deals for myself to ultimately invest in those properties. So in this video, I'm going to actually talk about the criteria that I personally look at for my own deals. And this might help you, if you're looking to invest in property, or if you're investing in property right now, it might be good to see a perspective from someone like myself who is quite active in the game and who has been for a couple of years. So let me dive in here and let me just illustrate something on the screen so that you can see kind of what I'm talking about here. So there's effectively two sides to my portfolio. Side number one is my long-term rental portfolio, okay? And I'm going to dive into that in a second as to what kind of properties I actually look for in that. And what kind of criteria properties. So even if you're not investing in properties in the UK, there'll be some takes that you can take from the way I look at a long-term rental portfolio. And then the other side of it is like my cash generation activities, right? And these will be things that are slightly riskier, like activities. These will be, things that are slightly riskier, and things like flipping properties or getting into land deals, stuff like that, is what I would put into this category. So for my long-term rental portfolio, all I'm ever trying to do here, okay, is get properties in a really, really good area that give a decent enough yield, okay? Now, I'm going to talk about this a lot on here, is the word yield, okay? Because a lot of people, when they get into property investing, really, really get excited about this word, yield. It's like the return on your money. And although that is massively, massively important, it isn't the only thing I look at when I'm getting into property investing. So I'm going to first dive into looking at long-term rental portfolio and illustrate what I look for and why I look for that. So in order of importance, here are the three main things that I look for. So the first one is a good house in a good area, okay? And not even a house, a good property in a good area. I actually invest in some commercial property as well, but typically it's residential properties that I'm buying into. So that's the number one thing I look for. The reason why I look for that is because the bulk of your money when it comes to property is actually made on capital appreciation. There's a property I bought a couple of years ago for 93,000, and I think I put like 5,000 worth of work, so it really cost me about 98,000, and I've just had it valued there for 130,000. Now, it was only worth about 110, 120 when I purchased it, but a year later people are paying 130 for the same property, and I think that particular property will continue to rise in the coming years with inflation because it's a great property in a good area. And that's the number one thing I always want to look for. I'm not buying crappy flats in rubbish areas, because although the yields, and I'll talk about that in a second, the returns on these properties can be very high, they're not going to be as easy to manage typically, and you're not going to get as much cash in the door, and you're going to be left in a situation where you're not going to get as much capital appreciation on a property like that. You need to look at who's actually going to stay in a flat that's worth £30,000. It's not going to be the best tenant. It's probably not going to be in the best area. So that's the number one thing that I look at in my portfolio over anything else, okay? If somebody offers me a great property in a good area, I'll sometimes pay the market value for that property. I'll not even look for big discounts because I care about getting that number one thing right, okay? So the second thing that I look for is a good return on money, on capital, and more importantly, cash flow above, and instead of cash flow, I typically say having a rental above $550 a month, okay? So in Scotland, where I primarily invest, I want to make sure that my gross rent, so the rent, just the rent that's coming in, is above 550. And the reason for that is because as you grow, and get a more expensive house, what will typically happen is the yield, and I was talking about yield earlier, the yield of that property will diminish in returns, okay? Okay, so I created a little graph to illustrate this better. So basically what I'm saying is, as the property gets more expensive and you pay more money for the property, the yield will typically go down. So what I've done is I've illustrated some average numbers that I kind of see in the market, especially up here in Scotland. But if you're buying a property around £50,000 or £30,000, you can get really, really high yields. So that means the amount of cash you're going to get back from the total price of the property is going to be quite high, because there's a kind of minimum threshold to rent. Right, so a £30,000 property, you could get as much as £300 a month in rent for that £30,000 property, which is like a 12% yearly yield on that property. However, when you look at the cost of owning a property, the fixed cost of owning a property, there's still the same fixed cost for a £30,000 property than for a £120,000 property. You still, in that £30,000 property, need to maintain the building. You still need to put in a new boiler when it goes down. You still need to fix issues for the tenant. You still need to manage a tenant. So there's all these kind of fixed costs that you have that I never feel that getting properties at that low level is ever worth it. So what I do myself is I actually take a slight sacrifice for most of my investments on a yield side, okay? So I'll typically buy in around here, okay? So I like properties just now in around the kind of £120,000 mark. The yield is not as high as something at £50,000, okay? But it means that I have less issues typically. I usually get a slightly better tenant because my net rent's maybe £700 a month or something like that. And the tenant's usually going to be a bit better on average. The yield is going to be lower because I paid more for the investment than it's returning, but I'm getting more cash in the door. So when you look at my net yield, the actual money that I'm going to get at the end of the day, it's actually in many cases going to be higher than what a lot of other investors would get if they put in at the £50,000 range, because the fixed costs of owning and managing a property is expensive, and those costs need to be factored in. And unless you're actually bringing in enough cash to be able to cover that, it's not worth it. So the average fixed cost that I notice on most of my properties just now is about £1,000 a year. Now, I've not been doing it a long time, but if you're spending £1,000 a year and you're only bringing in and profiting £3,000 for the whole year on your rent, that's 30% of your money gone. But if you're bringing in double that, or £6,000, £7,000 a year, £1,000 a year doesn't hit you as hard as a return percentage. So I like to go in for the slightly more expensive properties. I don't go much above this because as you get into the £150,000, £200,000 properties, the rent doesn't tend to rise with the value of the property typically. So it means that you're getting a much lower yield. A £200,000 property might only give you a 5% as compared to an 8% at £130,000. So I prefer to kind of keep away from ones that are more expensive. Now, obviously, every single deal can be looked at individually. There are some properties I own that are over £200,000, which have amazing yields. But this is a kind of average sort of look over up to how I come about property investing, because I want to make sure that I'm bringing in enough cash to be able to cover all those fixed costs while still getting a good yield in the same process. And my third and final thing that I look for in my portfolio is that I'll have a great long-term tenant that will be with me for a long time. Okay, I know I've butchered that and spelt it all wrong, but you get the point. I am looking for great long-term tenants that are not going to be a bother. Okay, so before I purchase any property, I'm going to be looking at who's going to be staying there. And a lot of investors, they'll jump in and buy properties such as HMOs that are not in the nicest bit of town. And a HMO, if you don't know, is a property where lots of people stay in the one property, house of multiple occupancy. And sometimes with some of these HMOs, you don't get a good crowd of people staying there. So I like to personally have properties where I'm going to get a tenant in there. They're going to stay for a long time. They're not going to be a hassle on average. And I'm just going to get my rent every month. When it's my own portfolio, I want little hassle and I want income, and that's all I care about. That's the main criteria that I look for. So I'm going to dive into next my sort of cash building activities. So there's two main cash building activities that I do at the moment. One of those is flips, so property flips. And effectively all I'm doing here is I'm finding a property that is under market value. and I'm spending some money on that property, and then I'm trying to make a profit by relisting that at the market, on the market at a later date. So I'm adding value to that property typically, and you're making money in the process. There's a few amazing flips that I've done in the last couple of years, and it's a great cash generation strategy. And to be honest with you, it's fairly low risk. Obviously, there is the risk that you put it back on the market and the property doesn't sell. But when I do these flips, one of the main things that I'm looking for is, would I be happy to hold on to this property if it didn't sell? Okay, so a lot of people do some of these flips and the properties they're buying are pretty crappy properties that you wouldn't even want in your rental portfolio anyway. So when I'm doing these flips, I want to make sure that A, there's enough profit in it. I'm typically not going to do a flip unless there's at least £10,000 to be made on it. But I'm also looking to have a see if, would this fit my rental criteria as well? Would I be happy with this? Or maybe there's some things in this I wouldn't be happy with, but would I be happy to hold on to this if this flip didn't work out and the market changed in 6 months when I relisted it, and I had to hold on to it and rent it out? Would I be happy with the returns of that property? So that's one of the things I look for in my flips. I do a wide range of stuff on there. And then the other thing I do is land stuff, I guess you could call it. I'm very early stage to land, and I've been getting a lot more opportunities coming in. So if you have anything, please give me a shout. I'm always open to land opportunities. But typically the kind of level that I like to come in at is at the very early stages to try and get planning permission on new plots of land. We're effectively going to the council, asking the council, to give us permission to build some kind of scheme on that piece of land, and I'm getting a return, because if you do that on a piece of land and you get that planning permission, you can sell the piece of land on for a lot more than it costs. So land stuff is something that I'm doing a lot more on, but flips and building up my rental portfolio has been my main money makers for the last few years, and the land stuff is something that I'm getting into that I think is going to be an incredibly good opportunity going forward. So that's everything. That's my portfolio. That's my criteria. That's what I look for. I hope this was helpful, and I hope it gave you some insight specifically as to how I come about property investing. It's very, very simple. I don't venture much outside of what I said here. The only other thing I do that's slightly, outside of what I said is I actually do invest in some commercial properties. But again, I've still got the exact same criteria when I'm coming about that. And that's how I do it. And there's no right answer to property investing. That's the great thing. There's so many investors I've met that see the whole yield thing completely differently to me. They see getting the higher returns is much more important, and that's fine. There's not a right answer. It's just personal, what you want out of investing in property that really makes a difference. And if you're ever going to work with somebody who's going to help you find properties, if you're ever going to work for a sourcing company, it's important to find someone that actually understands your personal needs from property and can help you build a portfolio that meets your personal needs, because not every investor is the same, and there's deals that I would turn down that somebody else would take, and there's deals that somebody else would put down that I would take. So it just depends on your personal preference when it comes to property, but this is mine, and I hope it's provided some value. Make sure you subscribe to the YouTube channel, and I look forward to seeing you in the next video. Goodbye.